What I will do is just give some indication, some trends we see in the new energy market and what's driving that, and give some basis for our discussions later on. One of the key topics, of course, is the need for decarbonization. I think we all are talking and feeling that the global response to the threat of climate change is impacting, I would say, all industry sectors, and especially I think it brings the biggest change for the energy systems for decades now. We see that the climate path agreed in Paris is driving more and more activities, investment into the especially energy sector. And the upcoming COP26 later this year in Glasgow will also give, I think, an additional significant push into the sector for further decarbonization, but also for quantifying what we can do. And new energy will be a significant driver behind that. The second thing is, it's not just the government that are pushing into the trend to decarbonization. We're seeing more and more stakeholders are also requesting a change. It's from, let's say, the capital markets, the corporates, the users, the end users, the customers, the all clients, and also the employees are asking for change. I think that's one of the key drivers that brings also significant investments into the new energy sector. Of course, the second trend is the technological process. I think if you look at the old world of energy production, there's also a change. We have more and more sources for new renewable energy. We see new battery systems. We see that connected homes, smart homes are much more digital. And this all brings a more decentralized system of energy production into the new world, but also bringing smarter, cheaper, and cleaner tech up to the agenda, which was not the case decades ago when the current infrastructure that we see was set up in the energy sector. The third trend is the request for clean air policy. I think it's also a sector where energy has a significant impact. We see more inhabitants focusing on clean air, want to reduce air pollution. And one, I think, important step was the air pollution action plan from 2013 in China, pushing into the sector, also driving significant investment into China, into renewable energy, battery technology, and electric vehicle. And one additional advantage of the push was that these technologies were more and more and are more and more affordable for the wider group of people and end users, like I said, especially the electric vehicle in China, but that also gives a significant push around the globe because I think the affordability is an important piece. It's nice to discuss new technologies, but if nobody really can afford it, or the prices for this energy we produce with the new technologies is not affordable, it doesn't make so much sense, and it will not give such a huge impact to the market which we need. The fourth trend, I would say, is the wider environmental concerns. Let's say it's about polluting the oceans, etc. And that's also one important sector where the energy sector can have a good and positive impact. I think the key word is energy from waste technologies, that we can avoid pollutions in the oceans by using this waste for the energy production. I think that's a key trend where we see several good investment opportunities and technologies evolving. And last but not least, the fourth or the fifth driver of changes in new energy is, of course, the aging infrastructure. If you look at the existing energy production or the majority of energy production infrastructure, it was built decades ago. We see the coal, gas, nuclear plants set up in the, 60s, 70s, or even earlier after the Second World War. And all these plants and technologies are coming to the end of their useful lifetime, and that's where also governments and a lot of stakeholders pushing for new technologies, new renewable infrastructure energy systems, which are also subsidized by loans and other subsidies, and also the demand for new renewable green energy is growing. So there's a good competition of, let's say, old infrastructure with new infrastructure. And of course, the key winner we see, also supported by subsidies, is of course the new, more decentralized energy production field. But that's something we will discuss later today. So these are I would say, the 5 drivers we see in the market. And what does it mean if you look at the old production style, the traditional energy production downstream from the production down to the customer? I think that will significantly change. As I said, we will see the new supply chain of energy production, with much more decentralized facets like batteries and etc. in the middle of that. As the production, especially from solar and wind energy, is not so stable over time, we have to see how we can store energy in between, and I think that's much more flexibility in the whole supply chain, but it also gives us a lot of investment opportunities. So what does this mean? I think it's a big change, it's a big transformation of the whole sector. Hundreds of billions of whatever currency you take, euro, dollar, pound, is needed to transform the sector. But also the old style, I would say, of investments and investment funds are changing. As I said, in the key trends, we see more technology enabled systems, energy production, a more decentralized production, where we simply have to involve new skills and new technology expertise into the sector. But that opens up different new investment opportunities also for different risk return profiles. As you can see in the chart, of course, there are some new venture capital style, I would say, investment opportunities where you can have investment returns like they are usual in venture capital, 20% plus. And then you have the growth area of investment opportunities in the energy sector, bringing returns 10 to 15% IRR, which is a classical private equity style investment like hydrogen, advanced hydrogen, etc. And then you have the bigger investments of mature technologies like wind, solar, that are more advanced, which are a good basis for the large infrastructure funds globally, focusing on the return profile, I would say 5 to 10%. Or even a bit lower if you compare that with the interest environment we currently see. So that's as I see, there are key trends. There are lots of opportunities coming up for every type of investor, but it's a big change also on the people side. As I said, more technology involved, more new skills are available and needed to do this transformation, but it's a good road, but there is a lot to do. And I think all investors in this field will have a bright future if you focus on the right trends and in the right opportunities.